is your shooting star. So this shooting star candlestick pattern is last on the list of your single candlestick patterns, and this is somewhat similar to inverse hammer. The only difference between inverse hammer and shooting star is the position at where this candlestick pattern appears. So shooting star, since it is a bearish reversal pattern, it is more effective when it follows an uptrend. So shooting star will appear at the end of an uptrend, and following shooting star you will see that the market direction it reverses. So if there is an uptrend ongoing, market direction will reverse and you'll see an incoming downtrend. So the color of the candle, it can be green or red. However, when there is red candle, it indicates a higher potential of market moving in downward direction. The shooting star does not have a long lower shadow. Instead, it will have a long upper shadow where the shadow's length is twice the length of real body. And this longer wick, it indicates the bearish nature that is going to be introduced in the market. Since there is an uptrend in the market, it means that bulls are in complete control. The stock reaches its all-time high, and here, due to entry of bears, there is a downward push, and hence the price moves back to the opening price and it creates a long upper shadow, a long upper wick. So now let's understand how will I trade with shooting star. So here shooting star, since it is a bearish reversal pattern, meaning that the previous market trend should be an uptrend. So that's one of the key factors while trading with shooting star, that my previous market trend should be an uptrend. And when I'm planning my entry, the entry price should be close to the real body of the candle. And talking about stop loss, the stop loss should be slightly above the upper wick or upper shadow of the candle.